Hey, what's up, guys? Um, I get questions a lot, and they usually show up in the same question, basically in different clothing, over and over and over again. I'm going to show you that question here in a minute, but it has everything to do with like buying, time in the market, dollar cost averaging, and what it almost always involves is my crypto flywheel, or a lack thereof, an understanding around the wealth building principles that are found in the crypto flywheel. So I want to get into that question, and I want to talk to you about like when to buy and how much to buy, and when, timing, stuff like that. But before I do, I want to do a quick flyover here of the crypto flywheel, not as an introduction, but like how I connect the strategies in my head with my personal strategy, and how you could potentially do the same and how to view it. So obviously, when we use the cash flow part of the flywheel, that is our chance to create house money. You hear the term playing with house money. It's like it's obviously a gambling term, which we're not gambling. We're trying to be targeted, sophisticated crypto investors who choose projects that kick off cash flow and residual money that we didn't have before we put our capital into it. And so what do you do with that? Well, my time period, or the way I enter into that part of the cash flow, that part of the flywheel, the cash flow part of the flywheel, I enter into it, like I've said before, ankle deep, then I get in deeper, then I get in deeper. It's just like walking into the lake, right? I want to get feedback loops. I want to put a little bit of capital in there. It's just like business. Like when you're trying a new strategy, you're trying something out for the first time, let's not go all in, right? Let's get some feedback loops. And this is what I'm doing with the cash flow part of the flywheel. This is an exclusive feature to the cash flow part of the flywheel, is I go in ankle deep first. And my time horizon in the cash flow part of the flywheel is typically about 90 to 120 days. This is the highest level of trading frequency, if you want to call it that I really do in the entire flywheel. I'm moving from project to project, embellishing it, for lack of better words, embellishing the early hype of stage one. If you've gone through the crypto J curve training yet, I'm embellishing the hype from stage one in a lot of cryptos, or I'm getting in at a bargain price on a strong stage two crypto, one or the other. And I'm taking that APY home with me, or I'm putting it into the second part of the flywheel, which is the appreciation side, or the buy and hold, build equity part. And right here is where you typically want to think about the other questions that come into play that I'm going to cover in a second, like buying the dip. When do you buy? When do you know to buy the dip? When do you dollar cost average and things like that? But I'm going to seasonally, especially like in a bear market, I'm going to take a majority of the cash flow, or the house money that I'm creating, usually in the neighborhood of 80% of my cash flow, and I'm just going to plow it into the appreciation side of the part of the flywheel, because I'm getting bargain prices, because everything's suppressed. All the prices are low, comparatively speaking, to their all-time highs. And these are, again, this is the stuff we have conviction about. They have great utility and a broad vision for the future. And this is the plumbing and electrical, the scaffolding, the bones of future crypto society. Okay. These are things like layer 1, layer 2, Ethereum, Bitcoin, Avalanche, Solana, the top 25 market cap cryptos, stuff like that. Okay. Whatever it is that you believe in. I'm not shilling those things. Those are just hypothetical examples. Chainlink, stuff like that. Okay. So that's what we're just continuing. Like, this is the snowball part of the flywheel. Like, this is the part that you just want to keep building and building and building and building and building. And maybe it's as simple as you just keep buying Bitcoin. That's fine. I would never judge you if all you did was buy Bitcoin in the second part of the flywheel. And then, of course, the third part is leverage. It's the most exotic, least used, but it is meant to be an accelerant of stage 2 and stage 1. That's it. It's an accelerant. You buy or you take your current appreciation or your current equity, you use it as collateral on a loan to go buy either more cash flow or more appreciation, more assets. And obviously, this requires a high level of sobriety, and it's not to be used in a casino mindset. Okay. We're buying things that we have conviction in. We're buying cash flow. And this could be outside of the world of crypto, obviously, like I've done many times with real estate investing, for example. But inside the world of crypto, leverage is very powerful, even to buy more Bitcoin if you want to, or buy more of a particular cash flowing protocol that you have been in and have success in. Okay. But when I'm in the cash flow stage, I'm going in and then I'm waiting, if I can, on my second or third deployment of capital to see if the project or if the crypto protocol is going to enter into a capitulation stage, into a stage where I can accumulate more of their native crypto tokens at a lower price. So here's an example of a question that I get a lot, and I'm just going to read it and read along with me. Do you have any, or are there any best practices in regards to buying the dip for the main coins? Since no one can time the bottom, any recommendations on dollar cost averaging to the main coins, assuming we are comfortable buying in as they go lower? I think he's referring to the appreciation part of your portfolio. Since I'm, like a lot of us, fairly new to crypto, I have no idea if some of these coins are possibly grossly inflated, like that. The stock market has bull run, the stock market bull run for the last 13 years. I don't think it's the same, but figured I'd throw the question out there. So I get that question a lot over and over again. And honestly, this is the catalyst for me creating this module. And so I want to show you just an abbreviated response to that question in terms of training. And so I have basically 3 approaches specifically to buying the dip and dollar cost averaging, like basically what to do with stage 2 of the crypto flywheel in a bear market. That's another way to approach this. So notice this image is kind of like the last I guess 7 or 8 years of Bitcoin, and all of the yellow lines are effectively examples of dip. All the yellow arrows are examples of dips, right? The dips are all different, so everything's very subjective based on where you are in time. If you go right now at this, at this $36,000 figure, well, that's really expensive compared to people who purchased under $1,000 back in 2015, right? So it's important to number one, realize where you are on the time horizon. But what I do is threefold. Basically, I set up a drip savings or transfer, a drip transfer from your bank account or any funding source. And you convert X amount of dollars, and maybe this is $50 a month or $50 a week of fiat, US dollar, whatever currency you have in your country, into the appreciation phase every single month. Okay, there's a typo there, obviously, but every month I'm just dripping into, and this is into things you believe in. Again, the law of stage 2 of the crypto flywheel is invest in what you believe in, what you've studied and what you understand. And hey, if that's only Bitcoin, then that should be all you invest in. Don't just gamble and throw it on stuff that you just heard somebody talking about. Okay. Number two, I seasonally identify the amount of cash flow crypto that I divert into the appreciation phase. Is what I was referring to earlier. So during a bear market, I'm going to put about 80% of my daily cash flow residuals from my cash flow crypto into a better denominator, a better appreciation, long-term buy and hold. I'm literally just fueling my positions, and effectively I'm dollar cost averaging. Okay. And then lastly is I keep a healthy amount of stable coin available during bear markets, like the last 6 months at the time of this recording, to buy whenever coins put in new lows. And if you look at this image, the people who bought, like in the middle of the graphic here, if you bought in these dips, well, you still bought higher than people in these dips. So the people in the middle of the graph, their dollar cost averaging was more expensive than the people on this side of the graph. But if you take this chart, this timeline, and you push it out 10 years to 2032, the people in the left or in the middle are basically on the left, because this price will keep going up and up. Obviously the idea here is that Bitcoin, for example, will eclipse the market cap of gold at some point of 10 trillion. Well, if it's at 10 trillion, there's no chance that Bitcoin is anywhere under 500,000, 750,000, maybe $1 million per Bitcoin. So when is the right time to buy? It's basically all the time, as long as your time horizon is long, and that part of your flywheel, that second part, the appreciation stage, is a long-term horizon. It's not your crypto slot machine. It's not for you to go buy Dogecoin and hope it moons in the next 3 months and you cash out and you're done. The second part of the flywheel is meant to be your wealth building arm. And the cash flow is simply the hydroelectric dam that's creating the energy from the river that's running through it, AKA the crypto market. And so this is really the way I view things when it comes to building your net worth over and over again. So I'm not diving too deep into leverage on this one. I just wanted to talk more about timing, when to buy what you actually believe in. And I think the biggest thing to say is, do you actually believe in something? Don't invest more money than you can afford to lose. And then when you do start investing sacrificially into crypto, don't sacrificially invest into something that you may not have a strong conviction on. Okay. That's just called gambling. Don't be a gambler, be an investor. Thanks.